Twani, Kendall Zimmerman, our other program officers, Deputy Director Jessica Cato, and I'd like to introduce our new communications manager, Emma Mantooth.
Nice to see you this morning.
So we will we'll have a Q&A after we go over forms A, B, and C. And if you would just please enter your questions in the chat after those sections. And if you have any questions, I'm going to do like a general overview part. So if you have any questions, please just enter them for that as well. Jessica, could you just bring up the tier 2 page for us?
Of the website?
Yep. Thank you. So just want to remind you all of the resources that are available on the tier 2 page. We have the written and recorded tutorials on the annual submission process, the submission directions, the templates for forms A, B, and C, and some other useful information to help you with the process. And you'll also find the important dates and deadlines, as well as information on funding distributions and bank verification deadlines. So yeah, just very useful page for you. So just to go over the statutory requirements, qualification for tier 2 funding and how that funding is distributed is described in the SCFD statute. So all SCFD funded organizations must demonstrate that most of their activities are conducted within the state of Colorado and principally benefit the residents of the district. Tier 2 organizations must also demonstrate regional service and impact as established by the SCFD Board of Directors. Resolution 1707 states that for purposes of tier 2 qualification, organizations must show that at least 15% of their total Colorado attendance comes from outside of the organization's home county. If an organization falls below that threshold, we'll use a 3-year rolling average to determine compliance. So it's really important to track your attendance accurately to ensure continued SCFD funding and to qualify as a tier 2. The tier 2 funding that you receive is based on 3 different factors. It's qualifying annual income, qualifying paid attendance, and documented free attendance. The statute, SCFD board resolutions, and memos provide definitions for those terms and guidance on reporting those. So annual operating income means operating income from all mission-based sources, except capital construction fund income, designated funds raised for the purchase of specified capital needs, unrelated business income, funds raised for debt reduction or an endowment, any distribution of monies by the board, and any restriction established through board policy. Paid attendance means the total paid attendance at all mission-based programs as verified by annual audit reports. Dana and Kendall will go into more detail on each of those criteria in just a few minutes. The annual submission deadline is Wednesday, June 14th at 4 p.m. And we do recommend submitting before the deadline so we can review your application for completeness, just in case there's anything that's missing. As a reminder, incomplete or late submissions will not be accepted. To qualify for tier 2 funding in 2023, organizations must have a qualifying annual operating income of $1,796,865.14 in their most recently completed fiscal year. This is a 2.8% increase from 2020. And SCFD applies a 2-year trailing consumer price index average to calculate that threshold. We applied this rolling average to the frozen threshold that had been in place since application year 2020. The different factors in the formula are weighted, and those weights were set by our board of directors in 2017. Annual operating income accounts for 50%, annual paid attendance is 48%, and documented free attendance is 2%. All qualifying attendance used for the formula must pass that the 4-part test, which is described on both forms B and C. So it has to be mission-based, something that you would normally charge a fee for, or something that's normally free of charge for free attendance. You have to have traceable, contemporaneous documentation, and the activity must be open to the public. For virtual attendance, we sent out a memo last March, which states that only paid virtual attendance within the state of Colorado will be allowed as part of the funding formula if it meets the 4-part test. So no virtual attendance will be counted towards Form C, the documented free attendance. So now I will just turn it over to Dana, and she is going to go over Form A for you. Dana?
Thanks, Tim, for going over all that wonderful and important information. And hello, everyone. I'm glad you're here with us as we welcome spring with rain and snow. I will review in detail the qualification matrix Form A for annual operating income. This may feel familiar to some of you, but not so familiar to the rest if this is your first time. It's been a long time since we've been together, and so it's understandable if we're just a little bit rusty. So Jessica, could you please bring up the independent auditor report verifying Form A? And while she's looking for that, there's a sample of this available on our website in the Tier 3 directions. It must be signed by the auditor to be accepted. So please have your auditor fill out the independent auditor report verifying Form A. Now, let's dive, did I hear something? Let's dive into the details of Form A matrix. So Jessica, could you please screen share documents, matrix Form A and the audit together if possible?
You'll have to give me a second, Dana, to put them together.
Well, while she's getting that, I'm just gonna continue to go. The Tier 2 qualification matrix Form A determines two things. If an organization's annual operating income meets the qualifying income threshold, as Tim said, for 2023, which is $1,796,865.14. And I said that without stumbling over my tongue. And two, the organization's qualifying income. This is an essential piece of the Tier 2 formula to calculate allocations. So I'm just gonna wait for that form. It's easier if I can. There we go. Thank you, Jessica. So this is Form A. The distribution year is indicated in the top left of the form. You must use the correct version of Form A template for the year of submission. The Form A template is available on our Tier 3 page of the website, and please be sure to provide your auditor with a copy of the template for the correct year. Please use the correct year. An explanation of the matrix is as follows. Enter the organization name, the most recent fiscal year. The upper charts record total unrestricted annual operating income, or AOI, and the lower chart records total qualifying income. You will need to rename the column headings to match the revenue categories used in your audit. So this might be a good time, Jessica, to maybe kind of flash the audit real quick. So there is our sample audit. And if you notice the column where it says without restrictions, there's wonderful numbers there. And then the revenue on the left side, emissions, contributions, those will be the categories that you will use on Form A. So those should match what you put onto Form A. So let's go back to the matrix, please. So you're going to use your audit to fill in line 1 with subtotals of your unrestricted income. And I repeat, unrestricted income. Rows A through I are revenue figures excluded from qualifying income. Rows L through X are revenue figures included to establish qualifying income. The matrix auto-calculates across rows and down columns. The rows with an asterisk, you will need to provide a note or schedule to explain more details about that number or the amounts. And those should be completed obviously by your auditor. Also include schedules if there are entries in the net assets release column. So there's a column on the far right that we already set as net assets released. And please use that if you have any income that would fall into that category. And examples would be foundation, corporate, individual sources that were moved over. The total unrestricted annual operating income as reported on line K and the total qualifying income as reported on line Y should be equal. The total amount must exceed the Tier 2 2023 qualifying threshold of 1.796 million. So let's visit the upper chart in more detail. The following forms of income must be excluded from the calculation of unrestricted annual operating income. These must either be excluded per the SCFD statute or are exclusions based on accounting industry standards and the IRS requirements applicable to 501c3 nonprofit organizations or SCFD policy. Rows A and B for capital construction fund income and designated funds for capital needs, 100% of capital donations must be excluded. So if there's a capital income such as designated funds for capital needs or capital construction campaign, you will enter those amounts into line A and B as whole numbers. No sense, whole numbers. So it deducts from the total. Administrative fees cannot be deducted from this source of income and cannot count towards qualifying income. Row C, income for endowment corpus. This does not count beyond the distribution. In other words, the distribution from the endowment counts, but the corpus does not count. Row D, previous year SCFD income. Please exclude the total SCFD funds received for your most recently completed fiscal year. One of the things that I want to point out here is that you must add a note of which quarters of the SCFD income are reflected in the audit, since we know everyone has a different fiscal year. If the audit totals differ from the actual SCFD funds distributed, please provide reconciliation and explain why there is a difference. For example, accrual accounting or restricted funds. There's a lot of different ways organizations count that money. So for us to be able to reconcile it, please just let us know the quarterly distributions that are included in that row D. Row E or line E, SCC income. If an organization receives money from the collaborative of the SCFD, formerly known as the SCC, it needs to be excluded up to the amount paid on their membership. So for example, if your organization paid $5,000 to be a member of the collaborative and you received $4,000 back as part of the programming that was done, all $4,000 would need to be excluded. If you received $6,000 back, the $5,000 that you put in would be excluded and the extra $1,000 would be counted as qualifying income. In line F, unrealized capital gains and losses, these need to be excluded. So basically, we don't want to penalize or reward organizations for unrealized. So it needs to be backed out with which essentially just negates it. So if it's an unrealized gain, record the amount in the matrix and it subtracts it. If it's an unrealized loss, you put in it as a negative amount, so it adds it back in. So you're not penalized for it. We're basically trying to get that to zero. In kind, even by related party, any in kind needs to be excluded, even by related party. And I will mention to you all that we tend to find in kind included, and we have to back it out, which affects your bottom line. So please just make sure your auditors are removing that in kind. Unrelated business income per 990T. This is income that is not substantially related to the organization's exempt purpose. That is the basis of the organization's exemption. Revenue Code, this income, which is not substantially related to an organization's exempt purpose for the exclusion from tax under Section 501c3, which the organization must report and pay tax. This income is excluded because the income is not directly associated with the organization's charitable purpose. Line I, optional reconciliation row. We have this row to offer reconciliation if it's not in any of the rows above. An example case of when to use this would be if you get to net total of concessions or net total of special event, and if they're not already taken care of in your totals in your audit, you can account for those in this space here. Row J, that will be your total exclusions, and this will auto calculate. And row K is your total unrestricted annual operating income, and that will auto calculate. So once you prepare the top half, everything looks good. Now on to row K. Now your qualifying income says that you're over 1.796 million, and it's like, yay. So let's move down to the bottom of the matrix. Here, we're asking for your unrestricted annual income. That is to say your total qualifying income. The following revenue figures are included to establish qualifying income. On row L, that's ticket sales. So any seat and sales tax, since taxes are passed through the organization and therefore are not actual income. For example, Denver has a facilities development emissions tax, AKA the seat tax. I think the city of Lone Tree collects a 4% admission tax, with the exception of city of Lone Tree owned and operated facilities. Boulder has an admission tax. Just plain and simple, just include the net of seat and sales taxes. Memberships. If your organization has membership fees, please record that revenue. In row N, tuition. This would cover things like classes and workshops. In row O, concessions and gift sales. Record net of expenses. So remember to deduct cost of goods sold to come up with your net amount. We've on occasion had organizations report gross sales, and we've had to adjust those amounts to just include the net sales. P, rental and residency income. This is a form of passive income per the IRS. They carve that out as being a UBI or unrelated business income generating activity. You will need to have a detailed schedule for this. Examples would be if you had low income for residencies for visiting artists, or if you had a venue that you rent and put down collected amounts. Interest income. Interest earned over time is considered income. It should be net of the management fees. Individual donations, I think that's pretty self-explanatory. Corporate support for row S, I believe that's pretty self-explanatory. It includes sponsorships, social responsibility dollars, community giving. Row T, charitable foundations. If you're so lucky to get Carnegie Mellon, Bloomberg Philanthropy, there's so many. Row U, endowment transfer to operations. For example, if you have a quasi-endowment, which principal and income may be utilized at the discretion of the organization, those can be included here. These funds should only be counted once towards an organizational qualifying income. Be sure that the qualifying revenue should not include contributions to an endowment. Row B, government. This is exclusive of SCFD, so funding from sources such as Colorado Creative Industries, local government, NEA grants. These are great examples for this line item. Row W, special event income. Make sure you're using the net revenue. And then X is for other revenue. If an organization has income not reported elsewhere, report it here. For example, things such as ATM fees, reimbursements, royalty earnings, miscellaneous income. These incomes should have a schedule so we can verify and correlate. So just please note that anything that has an asterisk next to it, you have to have a schedule next to it, a schedule or a note. And then a little bit about federal and other COVID relief that you may have as income. Most relief programs are categorized as unrestricted federal grants. They don't necessarily need to be listed individually in a schedule. However, if there was a Paycheck Protect program, PPP loan, or other loans, these are not counted as income until they are forgiven, and there should be a footnote that it was forgiven. Loans that are not forgiven should be included as liabilities on the balance sheet. If economic injury disaster loan, EIDL, shows up in organizations' finances, the loan portion should be in the liabilities section on the balance sheet and not treated as unrestricted income for the purposes of SCFD qualifying income. There are instances where there's an EIDL advance, which are like grants, and these do not need to be repaid. Employee retention tax credit, it's required to show credit in revenue. Revenue should be recognized when they apply. This is based on reimbursement of payroll taxes. Shuttered venue operators grant and COVID PPE grants, which may be subject to a single audit, can be counted as unrestricted income. Although governmental incomes do not have the asterisk, it would be extremely helpful to the SCFD staff if you could ask your auditors to add a schedule or a footnote on the matrix that lists the amounts from these relief programs. And that concludes the Form B portion of my discussion. Do we have any questions at this time? You can put them in the chat and we'll monitor that. And if you're shy, you can always contact us. Okay.
All right.
All right.
I don't see anything in the chat, so thanks so much, Dana. And I'm going to pass it over to Kendall to go over Forms B and C.
Thanks, Tim. Thanks, Dana. I'm Kendall, Program Officer at SCFD, and I'll be going over the much anticipated attendance. So I will begin with the second and third part of that funding formula that Tim mentioned, which is Form B and Form C. Form B being qualifying annual paid attendance and Form C being annual documented free attendance. I'll pause through here to give some time for questions, but if it's a question for the general consensus that would be helpful, please ask it. If it's very specific and narrowed in on a particular program that you offer, contact us directly and we can talk through those specifics with you. As a reminder, annual paid attendance accounts for 48% of the Tier 2 formula, and the annual documented free attendance, which is optional, accounts for 2% of the Tier 2 funding formula. So I will dive in to Form B. Thanks for bringing that up, Jessica. I'm going to reiterate this as Tim said earlier. The 4-part test on Form B for paid attendance is that the program or activity must be mission-based. It also must normally charge a fee. It must also be evidenced by traceable contemporaneous documentation so that it can be auditable, and that it must be open to the general public. If you run through this test and your program agrees to all 4, then you would most likely place it in one of the categories below. As you see, we have 2 main categories, qualifying and non-qualifying paid attendance, and I will run through each of these items. So I believe it's row 14 on Excel, subscription and membership attendance. So these are for people who pay for a series of activities through a membership or subscription. So for a membership, you're only going to count when the patron uses the membership. So for example, a patron attends a museum 7 times, then you would count that patron 7 times. If you have subscriptions, you count the number of tickets sold. So for example, a patron buys 2 tickets for a 5-show season, then you would count the patron 10 times. That's the 2 times 5. The next row is individual general full price admissions. So this is any of your patrons that attend an activity at a minimum of once and they're paying full price, you would enter them in on this line item. The next row 16, this is your reduced price admissions. So any patron attending an activity at least once that's paying at a discounted rate. The next row, 17, is qualifying performance, exhibits, and benefits. I'll make a note here that any of these rows that have an asterisk, the same as on Form A, need to be accompanied by a schedule or a note with it, giving us a little bit more detail about that. So for this item or line item, for example, any special exhibits or activities that people attend outside of your regular activities. So for example, special events, traveling or singular exhibits, or distinctly unique performances, et cetera, you would place those attendance amounts here. On the next row, 18, paid enrollment for courses or classes. These are, for example, educational activities that students or patrons pay to attend. So for qualification purposes, you would count how many times the person attends a class or course. So for example, a patron attends a 10-week course 2 times a week, then you would count that patron 20 times. For the next item, qualifying tour group admission and attendance. For example, these are school groups, scout groups, any groups of that nature. You would count the number of admissions or participants only when a prior written agreement details the upfront payment per individual. So, for example, if you have an underwriter, there are certain documents, which I'll get into a little bit later, about what could qualify for that to be listed under here. The next row is row 20. This is your virtual online attendance. Noting here that this is Colorado attendance only. So as Tim had mentioned earlier, you would include any paid virtual attendance to your programs that still fit that 4-part test, but from Colorado residents only. Row 21 is your other qualifying attendance. This is sort of your catch-all for any attendance that counts but doesn't fall into any of the categories above. This could be example paid rehearsal performances or one-time collaborations. And then that next row, the total qualifying paid attendance auto calculates from those categories above. Under the next section, which is your non-qualifying, because we do need to know this as well, we have the first category, which is non-qualifying tours. For example, these are groups that didn't have a specified per person fee or they were private. Those would fall under this category. The next row is private events attendance, row 26. These are events that are not open to the public. For example, corporate retreats, invitation only, maybe if you host birthday parties. The next row, non-qualifying performance exhibits and benefits. These are open to the public, but may not be, but specific mission is secondary to the true nature of your organization. So fundraising activities, private events that may be different than the private event attendance above. The next row is other non-qualifying event attendance, the other catch-all category on this form. So any other non-qualifying that would not be accounted for in any of the categories above under non-qualifying paid attendance. Maybe it could be volunteer recognition activities, paid virtual attendance from residents outside of Colorado would fall under this category as well. And then the column or the row right below, row 29, would auto calculate from those 4 categories listed above. I'll go through a few more examples. But first, I do want to mention there is an agreed upon procedures letter that your auditor will need to sign and fill out that will accompany this form that they have completed, along with any schedules if applicable. Those will be combined into a single document and uploaded into the portal. Oh, I already did all my examples, so we're good there.
Kendall, we have a
Yes.
question from Lisa
Mhm.
about outreach to schools in the classroom. They don't do a per person cost, but a single price per event.
Mhm.
And told by staff that their verification of attendance provided by the school is sufficient to prove that this is a paid attendance.
Yes, so I'll just get into that right now. So something similar to this. So if you know that there's a registration of, say, 30 children from a school group that are attending and you give them a solid price for that, then by division, you can assume that the per person fee is set amount. Also for, as I mentioned, underwritten programs, which is also a common thing that is offered through the organizations. We accept certain documents that would be sufficient for SEFD records. One of those being a document submitted showing the budget indicating the per person fee, or a contract with the donor clearly stating the number of attendees their donation would support. Another one would be a donor receipt clearly stating the number of attendees their donation supports, or for a donor letter clearly stating the number of attendees their donation would support. So in this instance, we would accept that, as I had described earlier.
Great, thanks. That's
Yeah.
that's the only question I
That's a-
see so far.
Great. Oh,
Oh,
there's
one
another
more.
one.
Yeah. Would a senior ticket type count as full price or discounted?
Senior discount, if that is the full price of your senior category, it would be considered full price. However, if you had like 10% off, that would be then considered a reduced price. Lisa, for what category would that be listed under? Can you scroll up a little bit for me, Jessica? Thank you. Those would be, yep. For the senior, it would be under full or reduced. If you're talking about school groups, we would say under qualifying tour group admissions. I am going to move on to Form C, but we're happy to answer more questions. Form C. So this is an optional document. That means you are not required to submit this as part of your qualification for SCFD. It is up to the organization to determine whether or not they feel they want to bring the resources in order to track this. As a reminder, this is only 2% of the funding formula. Also, this is done by the organization, not your auditors. You can certainly ask your auditors to try and assist you with this document, but this is essentially verified by your organization. So we'll go through the 4-part test for this Form C at the top of the document. Again, it needs to be mission-based. The key difference is that it's free of charge. Again, you also need to have traceable and contemporaneous documentation. So absolutely no estimates, guesstimates. There was a tier 2 committee document about what would not be accepted. if you have questions about your tracking mechanism, reach out to us and we're happy to talk through that with you. And then the fourth piece is that it needs to be open to the general public. If you scroll down, we have those two categories again, qualifying documented free attendance and non-qualifying documented free attendance. And I will not run through every single category on here because it's almost the exact same. It just needs to be free. But the big piece is you no longer see that virtual attendance line item under qualifying because it's only for your paid attendance. And I'll just highlight again, any items that have an asterisk, need to make sure that you have a qualifying schedule with that on how it meets that 4-part test above. Again, this is the organization creating those schedules. Also, this needs to be accompanied by a supporting document with verifying your procedures. We have examples of those, all 3 of these letters in the directions for you to take a look at. I do want to bring up, because I do have an example of a schedule. Jessica, if you want to bring that up for me. I believe I have an example of a schedule. Yes. So as you can see here, this is sort of what we are looking for each of those asterisk items. This is for Form C specifically, so it's the number of attendance, the category type under which of those buckets you are creating the schedule for. So for the top one, it would be qualifying individual and general free admission. And then you explain whether for each of those 4 parts of the 4-part test, whether it does comply or doesn't comply. Hopefully that is so pretty simple. And then going back to the form, one of those key pieces for is that I want to reiterate is under row 25 is the untrackable attendance. And this is when you can't track, especially for free events. Sometimes it's very difficult, especially if it's an outdoor event and you have multiple entrances and it's just difficult to track. So all of that attendance would be under here, any of those estimates that you might have. As for each of those qualifying and non-qualifying categories, those totals will auto-calculate for you based on the numbers inputted above. Does anyone have questions specifically about Form C? The categories are almost identical to Form B.
We do have a question from Elizabeth. If we do a buy one, get one free admission, are those counted as one full price and one free admission? Or it could also, I mean, 2 reduced price, how would that work?
Great question. If that was for just, okay, so an admission, not a membership or a subscription, you would count the one full price and then the other one as free. Could you put up the example schedule again, Jessica? That's the question in the. And also just a reminder, we're recording this, so we'll post it on the Tier 2 page, so you can always pause on these specific screens if you need help to reference back to these. So with those 3 documents, as I mentioned with Form B, we'll combine those 3, the letter verifying your procedures, the form, and the associated schedules, if applicable, into one document and upload those to the qualifying section of the Tier 2 annual submission. But if no one has any other questions, I'll hand it back over to Tim. But again, please feel free to reach out to us if you have any specific questions regarding your attendance. This can be a unique one, to say the least.
All right, thanks, Kendall. Jessica, could you bring up the sample annual submission in Flux? And we can take just a quick look at the certification section. I know we haven't had to do this in a while, and I just want to go over, just highlight a couple things. So just a couple changes this year. One of the major changes is for your expenditures. We're asking that you list those as a percentage of the SCFD funds received rather than a dollar amount. This just makes it a little easier for our board of directors to understand where the funds are being spent. These should add up to 100% if you have expended all of the funds. If you haven't used all the funds, please use the text box below to explain why the rest of those funds were not used and what the plan is for those. If we could scroll down to just below net budget, we have a new question this year. Describe the organization's plan for navigating financial disruptions and ensuring resiliency of the organization. So that's going to be a new question for you this year. Another change is the attendance categories. So the attendance categories have been simplified in the certification section. So all of your paid attendance, whether it's reduced or full price, is in one category. So general visitor paid, whether it's reduced or full price, just put all under general visitor. And the same with your school programming as well. So that's just paid or free. And when you see the overall attendance section there, that should include all of your virtual attendance as well. So virtual attendance is just part of your overall attendance. And your overall attendance should equal the geographic attendance listed below. So all of those numbers, the geographic attendance and the overall attendance, again, are the same number. And virtual attendance is just part of your overall attendance. We've had a few organizations saying, way more attendance in virtual than they have overall. So just want to make sure that that's clear. One more thing, just a reminder for your school lists, those must be submitted in Excel format. And at a minimum, they have to include the name of the school and the name of the county. And for this list, we only want unique schools. And don't include any daycares or community centers, 4-H or Boy Scouts or Girl Scouts, those types of organizations. These are just schools and homeschools. And I see a question just came up in the chat. Yes, so paid virtual attendees should be included in that adult youth breakout. Okay, those were the main highlights on the certification. Again, the directions are pretty thorough, so check those out and feel free to reach out to us if you have questions. I think the last thing that we need to go over is the board presentation format. That is going to change a little bit this year. So to allow for more robust presentations, we're only going to have a third of our tier 3 organizations present this year. Another third will present the following year, and the final third will present the year after that. So you're only going to have to report to the board once every 3 years. And SCFD staff will select the list of organizations to present, and that will happen. We'll send that information out with details on the presentations in the May update. And we will have those presentations in August. So no presentations in July, it'll just be in August. And we're putting the list together to kind of get like the breadth of statutory disciplines and counties. So trying to just get a good sense of what's going on in the district as a whole across disciplines. Yeah, and we definitely encourage all of you to still support your colleagues and attend that August meeting, just to show your support for those who are presenting. I think that's about it.
And do you mind if I jump in first, quick
Sure,
sec?
go ahead.
Thanks. One of the things I did want to point out, Kendall, Dana, and Tim did a great job going through all of those intricate pieces that you all have to provide us. One of the things I do want to point out is that, you're doing it all at the same time, and it can be confusing because your Form B and your Form C are presenting numbers one way, your attendance numbers one way, and then when you're filling out kind of the report mechanism, this is kind of there's two pieces going on, I guess, is what I'm trying to point out as to why it can be a little, it might be a little confusing. So the qualification piece, which is the Form A, Form B, and Form C, that's to figure out, one, do you make the tier 2 cutoff? And what money are you going to get of the piece of the pie, right? So that's really figuring that out. The rest of the certification report, which is what were your, breaking down of your income, breaking down of your attendance numbers a couple different ways, that is the data collection for SCFD, so that we can figure out across all 3 tiers are asked the same data points, so that we can get an aggregate of how many school children are being served by SCFD organizations. What does the corporate philanthropy landscape look like? All of the data collection points. So I just wanted to point that out, that we are kind of doing 2 things at the same time with this annual submission. So if it is confusing at all to you, please reach out to one of the program officers and they'll be happy to explain in more detail.
All right, thanks, Jessica. And we have a couple more questions in the chat. When will the annual operating income threshold for the following year be announced?
Next week.
Yay. So we'll send that out in the tier 2 update, which will also include the information on the presentations for August. And let's see, another question for certification. Virtual attendance reported is still only for Colorado attendance, correct?
That is all virtual attendance in the certification section. The only reason that you would have Colorado attendance is only for the qualification side in the paid attendance. So biggest thing is certification, like Jessica said, is everything, all your attendance, everyone that you were able to provide programming to, that is meaningfully engaged with and is tangible. So don't include, there's categories in the directions, but such as indirect attendance or marketing statistics, Facebook likes, things of that nature. You can get more of those details in the directions, but it's everything from everywhere.
All right, do we have any more questions from anybody about anything that we've gone over today?
Thanks for the great questions, y'all.
Yeah.
Other thing too, just again, I know Tim covered it at the beginning of the training, but please make sure you have the deadline circled in red on your calendars, because we don't accept anything that's incomplete or late. So we definitely want to make sure everybody has everything in on time and has all the pieces that are required. So do yourself a favor, get it in, a couple days ahead of time so that our wonderful program officers have a chance to look it over, and then they can let you know, get in touch with you if something that's required is missing, and we'll be able to make all that work. So can't emphasize it enough. We don't want you sweating bullets, and we hate sweating bullets on the deadline day going, where is so-and-so? So yeah, please get it in ahead of time. That would be great.
as early as you can.
Yeah.
The question in the chat is, what is the ideal early submission timeline? As early as you can. The closer it gets to the deadline, the more program officers tend to get inundated, especially with questions, with submissions and trying to review it. So the earlier you can get in, the more time we have to thoroughly review it, to make sure if we can provide you if something is missing, how we can explain the best way to approach that. Great. Thank you all. We're going
Yeah,
to sign
thank
off.
you so much.
We'll get this recording up on the Tier 2 page by the end of the week so that you can reference it at your leisure.
Thank you all. It's good to see so many names and
Yeah, thank you.
faces. Thank you.
Bye, everyone.